Decent day of trade for Indian markets, but tomorrow it's once again all about numbers. What could influence and impact your portfolio? All that and much more on markets tomorrow.
And the 6,300 mark held on to, so we'll talk about all of that with our three experts who will be joining in over the next half hour on Business Day. We'll get on board Tushar Mahajan, Head of Derivatives from Nomura, who will be joining in. Apart from that, Ashwini Gujral, Fund Manager at ashwinigujral.com, and Nitin Raheja, CIO at AQF Advisors, will be with us. Well, let's start off then with Nitin. And Nitin, just wanted your opinion on the equity markets, because we keep talking about how everything is really going to hinge on the overall political outcome, and we expected that we would see a pre-election rally, but that's not really sustaining with too much momentum, is it? What's your call?
No, I think by and large, if you look, the mood will continue to remain optimistic for the markets, and you might even get your pre-election rally. Remember, we are yet another 4 months away from it. But the point is that, in our view, in the absence of clear macro directions for the economy or on decision making, considering the elections around, I think the strategy will continue to be bottom-up stock picking oriented, which paid off very handsomely last year. And I think, as you yourself enumerated a few moments ago, that the broader market has seen, quite a few stocks, hitting 52-week highs. So I think that will be the trend which will continue at least by and large. So you would probably see mid caps do well, mid caps, small caps. So I think you will see a lot of that action take place right away, all the way, in the run up to the elections.
Ashwini, today's market trend could be summarized in one line. It was all centered in and around the bank Nifty.
I don't think even that was true. I mean, 100 point, 150 point rally on the bank Nifty is nothing much to write home about. And, we keep talking about market will go up, pre-election rally. If you want, there is a rally going on in Aurobindo Pharma, in Biocon. So there is a bull market somewhere in the market, and most of the time markets are sideways and only a couple of sectors are in some kind of trend. So I don't think you can say that the market is sideways or not moving. Large cap indices are not moving, but overall there are enough stocks which are in clear bull markets, and that will remain the scenario. I don't think we will go substantially past 6350 or we'll go down below 6100. So this kind of choppiness will remain. Today's rally on Bank Nifty, I don't think should be extrapolated, maybe 100 points more, but basically it will remain a market of, couple of sectors which are, tech and pharma, and, people should try to buy into corrections in those sectors rather than try to time cyclicals or rate sensitives.
Tushar, would you concur with Ashwini that, we are likely to see this kind of a movement going from here on as well? And what's your call on the market and the index levels?
Yeah, that's correct. And I think that's a very classic case of the markets kind of getting ready to break out or break down in either direction. That's always preceded by a range contraction, which is what we are seeing. We have the earnings season which is on right now, and a bunch of large caps have reported. You'll see another host of earnings coming now, more closer to the end of the month in early February. I think that, coupled with the RBI policy, is probably the next big trigger which is going to cause the markets to kind of move either ways. For now, we'll have to stay stuck with this range, and we could probably see that, on the downside, the 6150 odd levels may probably narrow down to about 6240, and, the upside pretty much looks capped around 6330, 6340 odd levels. So you'll probably see another bout of range contraction before we finally move out.
Nitin Raheja, are you happy to own IT, or are you getting a sense that it's a crowded trade?
I think, Nikunj, we are very happy to own IT. It's one of the few sectors which continues to demonstrate tremendous amounts of visibility in terms of the business, and valuations, stocks specifically, are even today pretty attractive given the growth.
Ashwini, run us through what you made of Kotak Mahindra Bank. It wasn't the best set of numbers this time around, and the counter certainly suffered. A cut of close to 3% at 706. Is there more downside?
See, the downside is not substantial because there haven't been great rallies on Kotak Mahindra. So basically 675, 680 is the downside. Upside maybe 760, 770. So I don't think really a great bear market is on the way. Basically the market lacks momentum in terms of upside or downside as far as banks are concerned. So chances are that we should probably get into a lower range, which could be 650, 710, 720 type of a range.
Ashwini, for a mid-cap watcher, there are two stars, Biocon and Aurobindo Pharma, and both these stocks are doing all the right things. News flow is supporting them, volume action is strong, delivery-based buying is picking up. So after a 50% appreciation or maybe 100% appreciation for both these stocks, what is next for Biocon and Aurobindo Pharma?
Well, they keep going higher. And that is what people must understand, that if Ranbaxy has not moved, it will not move. Or if, Cipla hasn't moved out of a range, there is no interest. And the stocks that are attracting market interest will likely attract even more and more money. So anybody who thinks that after doubling from 200, Aurobindo is expensive or cannot move higher, I think only more and more people are getting convinced about the story, because as the prices move higher, more and more people become believers. So any kind of correction in any of these stocks is likely to get more buying in. And I think could easily, both of them could test levels of closer to 500.
Let's talk about the gainers list today, and that was clearly dominated by banking names as well as select metal and autos. Tushar, what's your call on Tata Motors? Because despite the recent underperformance, it's still in a bull market.
That's true, and I think the stock kind of got stuck in a range earlier on, and now it's trying to attempt to break out. We've got some good numbers coming out from JLR as well, and the way the stock has underperformed now, I think technically it definitely looks like it's going to set to break out. I would call for a very clear breakout once it moves past the 400 odd levels. But at these current levels of 380, 82, I think that's where it's trading right now. I would want to, start building up a position here.
Well, in fact, Nitin, just wanted to talk a little bit about the overall capital goods space. Do you see the tide turning, and do you think that with respect to the kind of policy initiatives that we've seen, that we are likely to see some amount of improvement within this sector?
Well, hopefully, I don't think things can probably get worse than they are. But, I think the improvement is going to be more gradual, and rather than a sharp comeback. So it's probably going to take some time to manifest itself. So and already probably the market at one level, what it has done is in the last say 3 to 4 months since we saw this rally in the broader market, you've seen a re-rating, or these stocks were trading at really very low valuations, and you've seen some sort of value buying which has taken them up, and so on and so forth. So I would be a little wary, because I think the overall turnaround is probably going to take some time, and these stocks will probably would be running on optimism till then.
Tushar, what is your take on absolute cyclicals, capital goods, banks? Because at the beginning of the year, the core assumption was that this sector will turn around, we have an economic bottom in place, but the price action is not showing any evidence that these stocks have bottomed out.
I think that's true, and what is cyclicals is probably one of those sectors in in the Nifty per se, which hasn't really been able to sustain its highs. Over the last almost 2 months or so, what was happening in the Nifty was that you got one sector which was leading the charge on the Nifty, over a 2-week odd period, that sector changed and a new sector came in. But in that entire process, the previous sector didn't really, come off while it paved way for another sector. I think cyclicals has been a big disappointment. There was a time when I think sometime in mid-December or so, when like you said, there seemed like a new bull market coming in for the cyclicals and all these stocks were leading the charge on the Nifty per se. And once they gave way to pharma and IT sectors back again early this year, these sectors have absolutely had no chance to stay on to the levels that they reach. It is still time for the clear bull market on the sector space to kind of come in. There is a whole lot going on the space per se. And one would have to be very nimble-footed in trading these stocks, just try and trade the technical levels and that's about it. To say that, we are in kind of a bull market for these stocks would be probably an early sign. Within the space per se, obviously we like LT, given the fact that it is the industry leader and we would see that stock performing first before the rest of the pack begins to move in. But there is some time for it to move really in a, secular fashion per se.
Apart from that, of course, media has been garnering quite a bit of attention. Ashwini, we're expecting a pretty solid set of numbers from Z Entertainment tomorrow. Is there any stock that you like within this sector?
See, I don't really fancy the media space. Yes, Z Entertainment earlier used to show momentum, but of late it's basically sideways between 270 and 300. And the others, since they are not in futures and options, I don't think are doing anything significant. Maybe an odd PVR, which is a sort of a portfolio stock, but I don't think pure media you have any stock that is in a great uptrend.
Tushar, give me two absolute buying ideas from the PSU banking space, because considered that space is considered as the big ugly duckling.
At this point in time, with the way the wind's blowing with the public sector banks, it probably look to do, go long on PNB and Bank of Baroda among the relatively large cap public sector banks.
As promised, we're talking about stocks to keep on your radar come tomorrow. We'll start off with what exactly the dealing rooms are advising. Poonam now joins in with some stocks on her radar. Poonam.
Well, Avan, the top of the list is Bajaj Finance, which showed a splendid performance in terms of the third quarter results. A strong AUM growth of over 30%, and that's the AUM growth is again likely to continue. And strong rural focus for the company is doing well. Also, the company is a huge contender for a strong contender rather for the bank license. Also, domestic mutual fund, the institutional investors for the domestic mutual fund, one of the top the mutual fund is likely to buy into the stock, and hence buy on this. Goldman Sachs as well as JM Financial have a buy on the stock with a target price of 1910 by JM Financial. The second stock is of course TVS Motors, wherein a buy on that. The company is likely to announce or rather launch a new scooty of 110cc, and that's likely to do pretty much well. Besides that, company also posted a very strong third quarter numbers, and it is trading at very attractive valuations of nearly 9.8x FY15 price to earnings. So good going for TVS Motors. Attractive valuations are definitely to what one should look into in terms of the TVS Motors stock.
Poonam, I'm too old to celebrate birthdays, but when I was your age, I would not come to work.
Yeah.
So happy birthday, enjoy the evening.
Thank you so much, Nikunj. Thanks a lot.
Nitin, give me some stock ideas where you are investing, where you expect a 20 to 25% appreciation in this calendar year.
Nikunj, we like Bajaj Finance, which your colleague just talked about. We like something like an HCL Technologies, which we think even today trades at a very attractive valuation with and a huge relative discount to its larger peers. We like in the small cap space, we like a stock like Treehouse Education, which we think is on the cusp of growth. It's been growing, and I think it will probably register growth for the next few years at almost 25-30% every year.
Ashwini, run us through what exactly you have found attractive on the charts.
Well, Biocon is a buy with a stop of 464, target of 490. Tata Motors is a buy with a stop of 380, target of 405. And Aurobindo Pharma is a buy with a stop of 423, target of 445.
Tushar, give me one dark horse for the year where at Nomura you are allocating disproportionate amount of money. It could be a contra bet or it could be a popular bet.
That's true, but I think there's so many moving parts to this entire space per se. You know, you've got the oil prices which are coming off, which benefits the subsidy burden on the upstream companies. Then you've got this new announcement about subsidized cylinders being increased and stuff like that. So I think there's just too many moving parts, and people are yet not convinced, in the absence of a clear policy stand, to, you know, really build on those positions. They are at best trading stocks right now, and that's how we would position ourselves on those names as well.
And Tushar, give us your number one trade for the month of January in terms of, you know, where you see a lot of risk management in place.
I think for the remainder of the month, you know, ahead of the RBI policy, we would look at public sector banks versus selling off some private sector banks. So that would be one trade that we'll definitely look at. The other trade, I think you were speaking about earlier in the program, is in the auto space, where we would put our money on four-wheeler space versus the two-wheeler stocks, which is, you know, long the likes of Maruti and Tata Motors versus shorting Hero Honda and Bajaj Auto.
Then you like HCL Tech, but HCL Tech already is a performing stock. It was up about 90% in 2013. This year also it's off to a good start. 2012 also was a fine year for HCL Tech.
Sure. Because Nikunj, if you really look at HCL Tech and you look at the valuation that it trades at, given the kind of sustainable growth that it has been delivering for many quarters now, our call is that it will yet further narrow the valuation gap. Essentially, in our view, if you just take the current year, which is FY14 June ending for it probably trades at about 15 times. And if so when you actually compare it with its peer group for the following year, which is FY15, and the kind of growth that it has been delivering in excess of around 20%, you can do the maths yourself.